Hello again and welcome. Thank you for joining us. This is Robert Schein, Managing Director, Partner of Blanke, Schein Wealth Management. Today is the 3rd of March of 2022, and a lot of headlines moving markets. We're going to pay attention to that, and we're going to discuss that right now. Thanks for watching. Hello again, and thanks for watching. This is Robert Schein, Managing Director, Partner of Blanke, Schein Wealth Management. Today is March 8th of 2022, and a lot of headlines moving markets. Let's get right to it, and thanks for watching. So markets have been anything but tame, not only in the last day or so in trading, but in the last sort of year to date, let's just call it like we see it. That being said, we're doing real-time communications as to what our current positioning is and how our sort of little macro forecasts are both in the short and long term. Today I'll do just that and shed some light as to what's happening behind the scenes. All the real-time volatility is concerning, all the headlines, all the geopolitical tension. It just continues to get worse and worse and worse. Now, is there any optimistic sort of point of view on a go-forward basis? We'll discuss that. But in the meantime, let's talk about where we are as it relates to headlines. And last night, we're not short of any headlines. In fact, if you watch the exchanges from the commodity complex over in London, nickel commodities soared over 250% yesterday. They had to shut down the exchange, causing basically commodity blowout, if you will, across and a shock around the commodity complex around the world. Everything that you're seeing, it is just skyrocketing. Now, what happens there? Well, actually, traders are reporting that now not only did they shut down the exchange because of heightened volatility, but the volatility then triggered what we saw as program trading, and that was sort of too many people were offsides in the market, too many people were shorting the market. So the 250% spike in nickel is not going to persist, but that does goes to show you that a lot of people are betting sort of for and against the markets. Now, as we get closer towards what we believe is a bottoming out process in the market, so we're getting closer to the end than the beginning, which hasn't been fun. I acknowledge that as well, but there's a lot to be sort of on a go-forward basis. There's a lot to be optimistic about. Let's look at the market indices. All the Dow, NASDAQ, and S&P, all respective in sort of bear market correction territory, down 20%, if you will, plus or minus on some of those. Now, corporate earnings, the first quarter right now, we're in the midst of it. In every corporation, in fact, ironically, obviously they're pointing to the geopolitical headlines that are disruptive to their guidance in the meantime. We got everything from Victoria's Secrets last night said that the geopolitical crisis is actually impacting their first quarter sort of sales. So you're seeing all corporate America get what they want, which is a crisis that they can use as an excuse. Last month was higher input costs, the month before supply chain. That being said, we knew that the first quarter of this year was going to be suboptimal for corporate America, but still they'll be making money. They'll still have corporate profits. What they're trying to do is ultimately talk their own book and manage expectations appropriately. Why is that, Rob? Because their month over month and their year over year comps, remember last year we started opening back up and the comps are getting now they're getting more challenging this year than they were last year, because we started fits and starts last year out of the coronavirus, but these corporations are now sort of coming out of it. But they're trying to hedge their bet. It's almost like my child coming home and saying, hey, listen, I want to let you know that the teacher's going to have to curve the test because not everyone did a good job. My question to Jack would be, did you study? Right? Or my question to my children are, were you prepared? Don't tell me about other people. Tell me about how you prepared yourself. But corporate America does that all day long. And when they shift to grabbing the headlines like Victoria's Secret did, you know that it's a challenging environment. But that being said, when would you want to be an investor? You also want to be an investor long term in these periods of time. But if you look at big tech right now, if we have earnings come in and big tech is a cash flow cow, we love those companies and we love those sort of positioning of that because they're long dated assets. Now, if we have geopolitical headlines pull back, and we have the Federal Reserve next week, we're going to have this conversation when we see the Federal Reserve announce sort of their guidance. We expect them to raise 25 basis points, as they should. But I think their guidance is going to be a little bit more wait and see and accommodative. I think they only have that opportunity right now. And why is that, Rob? Well, because we just saw U.S. oil prices hit an all-time high, and that's going to eat into the consumer's wallet, eat into, again, corporate balance sheets. But is this predicting or projecting a recession? Now, oil over 100, and we're well over 100 right now, 125, and some say it could go to 150 right now in oil. But if we see oil get over 100 over a sustained period of time, historically, that has predicted a recession. Not every time, but it's not sustainable. So the question is, will we see in 2023, 2024 potential setup for a recession if we have sustainable oil over 100 plus? Yes, the answer is yes, because we will see it impact the consumers. That being said, Biden today was out there once again talking about how the approach to the geopolitical crisis is going to be okay because he's got the coalition of the world behind it, and Putin's going to back down, and we're okay because we're completely energy independent. In fact, he cited that we're net exporting right now and that we are completely fine to help others that need oil right now. And the U.S., not to say we're going to turn anything on or start production again, but he basically was super confident in saying that our oil problems are going to be okay. So we'll see how this plays out. But the concern is that if this persists, we're going to have a recession. Now, what markets sort of was basically sniffing out and sort of reversed after he spoke today was this little opportunity for Congress to act. Now, if you saw in the last 24 hours, Congress, on a bipartisan agreement, came to the president's desk and said, hey, we are basically going to ban all foreign oil coming from Russia, right? And it was a bipartisan agreement, which is very important right now because we haven't had Congress agree on anything. Now, the White House specifically worked on overnight asking for that information not to get out because they wanted to have the press and headlines and media today, and that's what Biden just did. But what does that bigger signal send? That means that there's bipartisan working together behind the scenes. And now, hear me out. Now, Biden is elected. He doesn't want Americans to suffer. He campaigned on that. He specifically even said that again. He doesn't want Americans to suffer, right? Well, what does that actually mean? Let's translate in that Washington speak, right? And both politicians, both Republicans and Democrats and independents, they all have policy and they also have Washington speak. And what we need to do is translate. So let's get our best translator out right now. It basically just said, show me the money, right? In the last 24 hours, we had bipartisan support that people are working together. Now, we know that the Build Back Better, or however they want to rename it, is completely dead. It died last year. But right now, we're in the middle of a crisis. And when we have a crisis, we have to act now. Ultimately, that's the only time that legislation is passed, most recent history, is through a crisis. What's our crisis, Rob? All-time high on gas prices. So don't let a crisis go by the wayside and utilize it to pass what? Legislation. We could rename it. Let's rename it to the People's Agenda 2022. Why is that important? Well, we have bipartisan support. We just saw that last night. The market just saw that last night. And what does that mean? Why is that possible? Because it's an election year. Don't let an election year or a crisis stop you from actually pulling legislation and getting people together and passing it. Now, will Build Back Better be in the form of a people's agenda? Again, we're just naming it that. Who knows what it comes? Yes, they will change the name and they will use part of this. And ultimately what that means is show me the money and spending. Clearly, we're going to see defense spending. In fact, if you look at markets, historically speaking, when we have geopolitical headlines break out, in the short term, it really is when the markets hit their all-time lows. And we just retested a double test of the February lows in the markets. In fact, NASDAQ, S&P, and the Dow reversed before I started filming this today. We'll see if that holds, but that's a positive retest on a technical perspective. We also now have sort of the hinting of Congress coming together under one crisis, which is when they work best together. And forget about all the money that we owe. Mom and Dad SNL will be there, and we'll just print more money and we'll just get it to the people. But that's what's going to potentially play out, and the markets are sniffing that out. So we retested, hopefully successfully, our February lows. We have more clarity next week from the Federal Reserve. We have Congress potentially working together to get more stimulus versus less stimulus out there because the people are waiting for the elected officials to ultimately help them. And we do need some relief at the pump because inflation is everywhere. Now, who knows if this all plays out? This is sort of what the market is seeing through the headlines, even though geopolitically, this is really not a very good situation right now. But geopolitically, if you look at all the historical data points that we've seen, this is the exact moment in time, at least if history is our guide, to take advantage of what's on sale. Because in 3, 6, and 12 months, even a longer dated view, you will be rewarded as a result. History has shown that. This is the height of the negative headlines, but let's see what's on sale. Let's take a pragmatic approach and let's see, hey, wait a minute, there's some great bargains, because I'd rather buy when it's down 20% versus when it's at all-time highs. So that's our update for today. Again, let's see what the market sees and pay attention to what the market's paying attention to versus the headlines. And so that's what we're doing for you here as we manage portfolios at Blanke Schein Wealth Management. Thanks for watching and have a great day.